GM and welcome back to the channel. We have a big day here with both CPI data coming out and ETH with the Shanghai update. We're going to take these in the order of crypto first, as it should be, and then finish up on CPI. So if you enjoy this one, make sure you subscribe to the channel. So as we can see from this whenmerge.com website, the mainnet Shapella upgrade 14 hours 25 minutes away from right about now. So this is coming in rather quick. We have this coming today, and as you can see, the validator execute is currently at 0. Obviously this will change once this countdown goes down, but the big question being posed today is this bullish or bearish for ETH? And coming into this, especially over last night and yesterday, we saw this on the USD chart, ETH selling off into the event, which is rather interesting. A sell-off before the actual news breaks or the event takes place. So as we discussed on Monday's video, if you haven't seen that, a bit more of a deep dive on the Shanghai upgrades, we talked about Lido Finance and their V2 upgrade coming in May. So around 5.5 million of the staked Ether, 18 million in total are staked, 5.5 of which are with Lido. They can't actually be moved until May due to Lido's V2 update. So quite interesting dynamics in play here and a lot of moving parts, but very interesting to see ETH sell off into this event. Now, as we see this chart here, this is ETH to BTC, looking at potentials to maybe flip a bit of Bitcoin into Ethereum. In my view, that is what I'm looking at. And these are the kind of ranges here, the two yellow lines at around 6% and 5.5% of a BTC per ETH. As you can see from this, from the highs back here, that was September, 8.5 million Satoshis, we're down roughly 25-26% at this point in time. So this shows you we've had a very strong impulse from Bitcoin, and it has been a Bitcoin season for quite some time here, and the trend is your friend. Bitcoin outperforming almost all the altcoins, and we're seeing this with ETH painting a bearish formation versus Bitcoin. But I do expect we will see a trend reversal, and that will probably coincide with some of these monthly levels around 5.5 to 6 million sats, quite a few confluences within here and over here as well. So those are the kind of areas of interest in my mind, but we should all be cheering Bitcoin dominance. If you want an alt season, you want Bitcoin to go up, build loads of dominance, and then get a fat rotation, and then send absolutely all of the altcoins. So GCR Classic posted this: will the Ethereum latest upgrade Shanghai result in buy the rumor, sell the news? That is the typical playbook for crypto. Or sell the rumor and buy the news, i.e. we sell off into it and people end up buying afterwards. Well, it's kind of skewed here, 48 to 52% in favor of sell rumor, buy news, which is kind of what we're maybe seeing here with this sell-off into the event, and then maybe it'll start to pick up here. But I honestly think it's going to just be choppy to the side and Bitcoin gaining more strength overall. But as everyone's getting a little bit bearish ETH, let's just remind ourselves with EIP 1559, ETH burns tons of itself. So over on the Ultrasound Money website, you can see here that ETH supply over the last 30 days is down 22,200 Ether net. Rather interesting stuff. Some really cool website and also some cool stats on here. If we just keep going down though, you'll see this part where you can see where the burnage is coming from, what dApps and what L2 environments, the optimistic rollups in particular, that are burning a lot of Ethereum. Of course, Uniswap being the biggest burner, people degen trading shitcoins as ever. But on here, you can see the likes of Arbitrum here, ZK Sync Era, we've got ZK Sync, Optimism, another ZK Sync Era contract, StarkNet, and then Starkware as well. We have the likes of Scroll coming, other L2 environments going to be born, the likes of Synapse Chain and others. And what this will do is have a net effect of burning more ETH over time. So of course we get these kind of bull and bear cycles for all the major assets. Bitcoin is the champion right now, Ethereum selling off, but the roles will switch again at some point. So I think there could be some nice rotation plays to be had between a few of these assets. Also to remember, this is a day of celebration in terms of Ethereum and ticking off items on the roadmap, becoming a full proof of stake chain with those withdrawals going live. Now we have the LSD tokens potentially looking a little bit Bearish here, down roughly 10%. Some of the big names like Lido and Rocket Pool here, maybe they've had their majority of the gains priced in during Q1, and now we see a bit of a flattening out here for these various tokens. We shall see. They do have catalysts on the horizon, obviously V2 of Lido as mentioned in May, Atlas for Rocket Pool on the 18th of April as well. These are fundamental catalysts, but I would love to know your opinion down below on this. Are the LSDs now kind of topped, and should we be looking for rotations into other sectors of the crypto market? Now moving on, obviously a big day here for the CPI data coming out in the US. These are the forecasts and the previous numbers. So the CPI month over month previously was at 0.4%. The forecast is now 0.2% for the month of March. The CPI year over year was previously 6%. It's forecast at 5.1% this month. And the CPI month over month, 0.5% last month, forecast 0.4% for this month. Here are the various banks and what they estimate the year over year to be. Typically, we're seeing 5.1s, a few 5.2s, 5.3 and 5.4 in here. So a median of 5.1%, coming down from 6% last time out, which is kind of interesting because this would be how that would print on a chart here. As you can see, this estimated amber bar at the end here. We've seen it top back in May of 2022, a gradual decline over the last few months, and then this has started to really steepen and a bit of a larger drop off here if it does come in line with that 5.1%, which could lead to more of a dovish stance from the Fed, which is what people, of course, are hoping for stocks to go up, and of course risk assets like Bitcoin, crypto, ETH, etc. So this was one of the news articles that is suggesting, yeah, we're going to get 0.4% on a month over month basis, and they are predicting 5.2% in the year over year data. But as we saw, 5.1 seems to be consensus. So what we're seeing from this is around 5.2%, 5.1% or lower. Potentially we see a nice bullish tick up in price action for stocks, crypto and other assets. And if we do see this above, say, 5.3% and higher, this is probably going to be short term a bearish catalyst. Now this is an interesting one that I found. So this is all to do with the members on the FOMC board and whether they are more hawkish or generally dovish. So we have the dovish scale at the top to the hawkish at the bottom. The most dovish board member Cook, the most hawkish is Bullard down there, who's been calling for like 0.5, 0.75% interest rate hikes. And these are the guys that are voting this year. So from this chart, you can deduce that some of the more hawkish stances down here, and the biggest hawk, Bullard, is not actually a voter on the panel committee at this moment in time. And so this kind of was put together on the basis of, look, we've probably got a fairly dovish set of FOMC members who are going to be voting. And if we do get this sustained runoff in the inflation data, it comes in line 5.1%, quite a large numerical difference there from the previous month of 6%. We're likely to have a very dovish tone from Fed members, and the policy would dictate that potentially we just get another 0.25% rate hike, or maybe even just flat, and they just keep things the same here, as of course we've had major issues in the banking sector. Next meeting is May the 2nd to the 3rd. So interesting data coming out today, but no decision for quite some weeks out. So the crypto wizard, Mr. Ansem here, posted this around banking contagion. Of course, the Fed setting the interest rates high is what has caused the issues in the banking sector. And he says the effects of rapid increase in the interest rates becoming evident during the past month or so. There's likely other areas of the economy that are similarly affected but not stressed to this point yet. But the Fed's action to quickly support failing banks is indicative of their reactions in the future. They want to maintain as much stability in the economy as possible. And as we've seen, this means money printer go burr, backing things up, ensuring we don't have financial collapses. That is their mandate. And as we know, they want to keep things ticking over. And here simply we have a chart of the green vertical lines being the CPI print versus Bitcoin price. So back on this one, this was October time, pretty much flat or neutral. We sold off into November's print, pretty much neutral for December. But the start of the year, the turn of 2023, January, CPI data comes in, Bitcoin up. February, CPI data comes in, Bitcoin up. March, CPI data comes in, again, Bitcoin number go up. And then we have this month here, April, the CPI data for the previous month coming in. Will we get another repeat here and a bit of a bullish tick up for Bitcoin yet again? Drop me a comment down below. What do you think of this? Is this the read that sends us into the low 30Ks? Or are you bearish and this is going to give us a bit of a nuke here with a nasty surprise in the CPI data? I'd love to hear from you. Drop me a comment down below, guys. I'll see you in the next one. Peace.